All right, it's 9 a.m. Are we ready to go, Jan? Do we have everyone logged in?
Yes.
Do we have a quorum of members?
We do.
All right, we'll call the meeting to order. Welcome to all those externally that are dialing in for maybe the first time. This is the State Investment Board. We are having a special meeting today, March 3rd. Welcome to the meeting. We've called the meeting, obviously, for the shared concern that we as the State Investment Board have, and we as elected leaders, for the ones of us on the board that are elected leaders, have, sharing the public's concern for what's happening in Ukraine with the Russian invasion of a sovereign country. So we're calling a special meeting to provide board approval for our staff to respond more fully to the situation outside of the normal terms of governance rules that we have in place, and also to respond to the United States sanctions that are now in place on purchasing financial securities even on a secondary market, as we have in the past through State Investment Board, to put a limit on those. The limitation on direct issuance of bonds has been shut down for a while, but now also the movement of secondary market of those bonds. I'd like to add that we did not ever purchase bonds directly from the Russian government. These are financial transactions on exchange-traded investment markets, and the way to raise funds for a war today would be to issue more bonds, and the way that the international community has responded, it would be very difficult for Russia to issue new bonds today, and we certainly wouldn't be part of that, neither would anyone else from the United States investment community, and it looks like the world community. So regardless, this is a travesty, this is a human tragedy. We don't want to be even putting the appearance out there that we're supportive of those investments having a resale value. So I think there will be some good news today, and that this will lead to a stronger ability for staff to continue this reduction of Russian investment exposure, and also some good news that there's been a lot of progress to date on reducing the number that has been published of the 15 million and change of Russian investment, which is very small of the 19 to 20 billion that we oversee from State Investment Board. It's less than 1/10 of 1%, but it still raises a concern. So with that, I'd like to get into the agenda. First item, official business is to I already called the meeting to order. So the first item is the acceptance of agenda. Is there a motion to approve the agenda?
I'll make that motion, Mel.
Second.
Motion Mel, second Treasurer Beadle. Those in favor of the agenda, say aye.
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 Opposed, nay. Motion carries. All right, we'll go to Jan for an introduction and overview of the Russian entity investment exposure, and Mr. Anderson. Thank you very much.
Thank you, Mr. Chair. Before we begin on the overview of this particular topic, I did want to provide the board and those listening in with an overview of the meeting structure and the limitations of that structure. So we know that we have a lot of interest in this meeting. Due to the quickness with which the meeting needed to be scheduled, it was scheduled and set up as a virtual meeting. And so for any of you who are listening in, that means that all of the board members, except Representative Kempenick, for his convenience, he joined us here at the Rio offices, but the remainder of the board members are all online and virtual. And what that means is that the guidance that we received from the Attorney General's office was that when you have a quorum or more of the board that is virtual, we definitely need to provide a virtual option for public participation. However, due to the quick scheduling of the meeting, we provided that option and set it up as a virtual meeting. We have since received a lot of calls indicating a desire to attend the meeting in person. However, the meeting staff members are located within the agency in an internal conference room. We've been unable to accommodate public participation in person, but I do want to reaffirm for anyone listening in that the the board members themselves are virtual, and so the experience for both the board members and anyone listening in is the same, is a virtual experience. With the board appearing virtually, and staff is interacting with the board virtually as well. So just wanted to reaffirm that. In addition, it is a special meeting of the board. And what a special meeting of the board means is that it is not a regularly scheduled meeting. And if it's not regularly scheduled, that means the board must really adhere to the confines of the agenda, what has been listed on the agenda. And we have also received a lot of comments or requests into our office for people expressing a desire to share their opinions with the board on this matter. There is not a public comment period that has been made available for this special meeting of the board. If at a subsequent meeting the board desires to provide for a public comment period, that would be something that could be identified and added to a future agenda, but it is not on here today. So we understand that people have expressed a desire to do that. However, that even though it is an open meeting, open meetings do not require that there be a public comment period, and there is not one listed. So with that, I will turn it over to Mr. Anderson, our Chief Investment Officer, to provide an overview of the Russian entity investment exposure that we know, we have learned thus far, and that we have endeavored to share with the public and via information requests. So, Mr. Anderson?
Mr. Chairman, Board, and Jan, thank you for this opportunity to speak on this topic. I'll first say that, of course, we are all appalled at the humanitarian disaster that is happening for this needless war. Just want to say that as I start here. And if I could ask Connie if we could go to page 2, please, of the open session document. So what I'm going to talk about initially is Russian exposure, entity exposure. And what I'm defining Russian entity exposure is as any entity that's domiciled in Russia where our client funds have an investment. And the total Russian entity exposure across the legacy, the pension funds, and the insurance funds is now, as of yesterday, about $10 million. And I'd like to identify that this situation is very fluid as managers are exiting positions, as prices are changing, and as brokers, traders are halting transaction activity. In fact, just in the last few hours, we received information that the DTCC, which is the U.S. Securities Depository, Central Depository for Fixed Income Securities, has halted trading on several Russian entity securities, which means there's a very difficult market for trading Russian sorts of securities. Also, we've received word just today that MSCI, which is probably the most prevalent provider of indexes for the emerging market of equities, has announced that as of March 9th, they will be removing Russia as a country in their emerging market index. So clearly this event is driving a very fluid, illiquid, uncertain market. And I'll try to highlight that as we go. So on slide 2, what you'll see is a table, and the table identifies 3 types of securities for which the client funds have been invested. One type of security is what we call equity commingled, and I'm calling them commingled in that it's kind of like buying, an index fund, say like from Vanguard or one of that sort of vendors, where the equities are in a fund for which the North Dakota RIO does not have discretion at the security level, nor do our managers who are investing those securities. And in the equity commingled funds, we have in the legacy fund about $4 million of equities that have Russian entity exposure. In the pension funds, in the equity commingled portfolios, we have about $3.3 million. And in the insurance funds, we have about $500,000. The second category in our table that I'm describing is equity separately managed funds. Equity separately managed funds are managed by an external manager who has expertise in emerging markets and who has discretion at the security level regarding which they invest. And what we see there is that we have about $400,000 of equity separately managed securities in the pension portfolio. In the fixed income portfolios that are, again, separately managed, here again, the managers have discretion, and we have discretion at the security level. The current Russian exposure in the legacy fund is about $600,000, and in the insurance portfolio is about $1.2 million. So the total exposure across all our client funds, across equity commingled, equity separately managed, and fixed income separately managed securities is about $10 million, broken out into $4.6 million for the legacy fund, $3.7 million for the pension fund, and $1.7 million for the insurance portfolio. If you could please turn to slide 3, I'm sorry. So to put this in context and compare it to what's happening in other plans, I just would like to say as an aside that most institutional pension plans or even endowments have some exposure to emerging markets, and as a result, likely some exposure to Russian entities. And what I'm showing you here is a table that was produced by Bloomberg News that shows various pension funds in the United States that have exposure to Russian entities. And so what you'll see is the largest exposure is about 0.5%, and the smallest exposure, and this is, as of yesterday, is about 0.05%, and that is the North Dakota SIB portfolio. Also, to put this in context, emerging market securities as a percent of total equities, according to MSCI's Emerging Market Index, is about 12%. So of all the global equities that are actively traded, about 12% of those equities are in emerging markets. And of that emerging market slice, the Russia percent of the EM index is about 3%. So Russia is a rather small slice of a rather small piece of the total world market. So 12% EM, Russia's 3% of the 12% EM. What that means is Russia is about 0.4% of equities in the overall global equity market. And when you consider the traditional 60-40 sort of allocation of equities to fixed income, Russia represents about 0.24% of equities, or 2.24% of assets in a typical pension plan. So as you look at the table, you'll see that there's a range from 0.5% to 0.05%. About 0.2% is about what the market average is for Russian securities. Now, if I could please turn to the next page. I mentioned that this is a very fluid market, and it's a very challenging market for investment managers. The estimates of value are very difficult to make because the market lacks liquidity. The sanctions and just the general unwillingness of counterparties to deal with Russia-related investments has made this market extremely illiquid, meaning there aren't parties to buy and sell securities. That's even happening for dollar-denominated securities, and they're difficult to trade because traders and brokers themselves do not want to hold inventory of these securities and have halted markets making for these securities. Also, the Russian government itself has imposed capital constraints on the ability of foreign investors to remove their capital from Russia. Please understand that all of the SIB securities are either in, and mostly in, dollar denominations, or they're in euro or pound denominations, and they were purchased on the secondary market, which means none of our securities were bought by changing dollars with the Russian entity. They were bought on a secondary market, exchanging those dollars with another investing firm. The European clearing, so they're not subject to this constraint I just mentioned. European clearinghouses have decided not to settle trades, and banks have extreme difficulties to move money in transactions involving Russian counterparties. This is perhaps, one of the most difficult sanctions for Russia in that they're essentially shut off from the world economy and that their banks are not allowed to transfer money with other banks in the global banking system. And those sanctions are continuing to ratchet up. Even if a sale of Russian securities is possible, there are few counterparties available to take the other side of the trade. So really the entire transacting activity in Russian-related securities is nearly halted. Lastly, and this is really important, index compilers may exclude Russia exposure soon. In fact, as of last night, MSCI announced that they will remove Russia from their probably the most prevalent emerging market index as of March 9th. And that's very important because all the indexing firms will no longer include Russia securities in their portfolios or in their index, which means indexing managers will not include those securities in their portfolios, and those that are active managers, probably are less likely to have Russia exposure in their portfolios.
Thank you so much. Thank you so much, Mr. Anderson. Board members, do you have any questions with regards to the information that Mr. Anderson has just provided? Otherwise, we wanted to.
Questions, Jan? Representative Beadle, or Treasurer Beadle, sorry.
That's all right. I was a representative for much longer. Thank you, Mr. Chairman, and Scott, thank you for the great information there. Real quick, so I'm looking at the data that we had end of February, where we had roughly 15.9 million, I believe was the number, across equities and fixed. So our fund managers already, through their own divestment, have already helped us drop our exposure by just over 37%. Is that correct? Just in the last 3 days?
That is correct. Our managers have both exited positions and the pricing of the positions has changed in time.
Okay.
So, yes, our managers have exited some positions.
Perfect. And like you said, with Morningstar ratings, them kicking them off the index, I fully expect that divestment to happen in a much faster and more substantial way over the next few days. And I was just, for context and comparison, I was looking at what some of the most common investments that individuals might have in their Robinhood account and their Vanguard account or their Schwab account. And like the iShares Emerging Market Dividend ETF is one of the biggest ones on Robinhood. That has a 12% Russian exposure. Schwab Fundamental Emerging Market has almost 8% Russian exposure as of yesterday. So I just want to applaud our staff for just at the onset. Our exposure, even in the emerging markets piece, is lower than most of the consumer products that are out there. So I just want to toss that out there, just as a sign of some of the diligence that had already been done on the front end.
Thank you, Commissioner Beadle. And I'd also like to say that our managers across the board were clearly underweight Russia, and that's basically what you're saying is compared to the benchmark, our managers were underinvested in Russia. Thank you.
Mr. Chairman?
Yes, sir.
Mr. Chairman, this Representative Kempnick. Scott, is time, like on this 10 million, is time, the securities we have, say it's 5 years from now, this isn't the first time we've faced losing money in these funds. There's been a few years ago, we had a thing in Arkansas, and that's probably before a lot of people's time, but over time, we collected most of that back and stuff on it, and can we, are these instruments still good, say 5 years from now? Say it does take us 5 years to get, or I'm just using a time frame of like this 10 million.
I wouldn't use 5 years, though, as a.
Well, I'm just using a time frame. That's not.
I'll just be very, transparent that at this moment, I don't think there's a manager on the planet that really knows where this will end in terms of, the economic value of these securities over time. But I can also say that the markets are very illiquid, and there are sanctions such that some of these securities can't be traded.
That's what I meant.
By sanction are not allowed to be traded. And so it's going to be, based on time, sanctions, and economic viability of the underlying entities that will determine whether, they will be okay investments over time. But our managers are making those sorts of assessments. They're following the sanctions diligently, and they're making political risk decisions, and they're making decisions whether they want to be in any of these securities or not, or even whether they can, decide to trade or not in this remaining $10 million piece of investment.
But we don't write it off today. I mean, do we? I mean, it's still on the books as an investment, isn't it?
Most definitely. So our most recent mark is about $10 million, as I've described. That's a price based on a very illiquid market. So it's very fluid. We'll obviously be, looking at this closely as time evolves, and we'll, keep an eye on what the values of these securities are, and our board and our managers are going to make decisions regarding, what we would like to do with these portfolios.
With that, Mr. Chairman, if you'd like, we could briefly comment on the frequently asked questions document that staff prepared.
Sounds good, Jan, go ahead.
Thank you. So staff has been working tirelessly the last few days to be responsive to all the requests we received, as well as actively, of course, continuing with operations following and implementing U.S. Treasury guidance in a very volatile investment market. So we've been working very hard, and we want to be as transparent as possible, and we also want to provide as much education and information that we can in a uniform and consistent manner. And so due to the fact that this agency has received multiple information requests, we thought it best to put together a frequently asked questions document. This document is available, of course, via the board materials on our website. It has been provided to individuals that have asked for additional information on this topic, including several media outlets, have all the same information. And what we endeavor to do is, one, reflect, first of all, the changing nature of the market, because again, from the time of the press release first issued by the governor's office on Monday to today, as of yesterday, actually, there was that 5.9 million reduction. So these things are very, very fluid. The situation is very fluid. Break down and really provide answers to what is the Russian entity investment exposure across all our pool of funds. There's been a lot of commentary and inquiry about the legacy fund in particular. However, we did provide information across all pools of funds, as well as the managers involved, and a little bit of education on what is meant by commingled funds. And of course, some of this investment exposure is in commingled funds, which are funds that have multiple investors. And when involved in these funds, now not all investments, obviously under management by the state investment board, are in commingled funds, but a portion of them are. And there are many reasons, advantages to investors for doing those. But when you do, it's much like a mutual fund. When you do invest in a commingled fund, you have, as an individual investor, limited discretion. And so we did try to provide some education and information on that, what the exposure in commingled funds were, and what is the relative impact and what of divestment, because divestment of a commingled fund involves divestment of the entire fund, not divestment of the individual exposure, unless, again, proactively administered by the investment manager of the commingled fund. So that was the information that was provided. It's here for your reference, for board members' reference, and again, is being provided as public information as well. With that, Mr. Chairman, that concludes staff's presentation of item A on the agenda.
Thank you. Commissioner Gottfried.
Yeah, thank you, Mr. Chairman, and Jan and Scott, thanks for the presentation. Just to get it down to as clear as possible, I guess for me is, would it be safe to say that we are removing our exposure from Russia as it's feasibly possible to do that? And we're certainly not looking at any new investments in Russia because of obviously the global sanctions and things like that make all this very, very difficult. But I think that, is that the message that we can send as a board today, is with some of the work that you've all done as a staff? And again, when these investments were initially made, I don't think anybody was expecting a global conflict of this scale. So like Treasurer Beadle, there's a lot of commend you on your work and the work that we've done. We are certainly limiting our exposure, but over the next weeks, months, we are going to continue to further limit that exposure. We're certainly not going to be getting anything new in this arena, correct?
That would you like to?
Well, what I would say is, based as the sanctions are written, based on the fact that the most prominent index provider is removing Russia from its index for equities, that there is not likely to be additional investment in Russian securities going forward for some time, for sure.
By any
investor, yes. And then regarding removing the exposures, the investors are following the sanctions diligently, and they are, in some sense, restricted from what they can sell because of the illiquid market. But I know they are making political risk decisions regarding this event. They're following the sanctions diligently. They've heard loud and clear from us, our concerns regarding the risk of these securities. So my estimation is that the managers will follow an orderly wind down of these securities. That's my expectation.
And Scott, you've said to me before, the U.S. Treasury guidance, the feedback we received from the investment managers is that the U.S. Treasury guidance has provided really good guidelines for an orderly exit for U.S. investors, for those investments that are to which the sanctions are applicable, and we can see the success of that guidance and that orderly exit just with what's happened with our own exposure within the last 3 days.
That is correct. Every one of our managers has said that this set of sanctions is very well thought through. It's escalating over time, so there are additional sanctions being imposed as almost in real time, but that they're being imposed in a way that at least the intent is for an orderly withdrawal from the market.
Mr. Chairman?
Go ahead, Keith.
Mr. Chairman, in your one question there on the discretion, the diverse divestment discretion, but the $510 million that's in emerging markets now and stuff on it, how diverse are you looking at? Is Rio looking at? Do we have like neighboring countries around Eastern Europe that could become part of this conflict, or are we looking at anything broader than these conversations right now, like with Russia? But I was just wondering, because I know we've got a broad, it probably isn't a lot of money in any one entity, but I was just wondering, are we looking at any other exposures that we could possibly have?
So the situation is very fluid, and the U.S. Treasury and, of course, federal government is, as Scott said, on almost real time, so daily basis, the guidelines are evolving, and to the extent that other countries have become involved, and I know there's been articles about that, connections and things, that guidance will be updated to reflect that. But we can't speculate on what that the guidance from the federal government is going to be, and they are in the best position to be able to advise U.S. investors.
Mr. Chairman, and no, Jan, and I'm not talking about just a knee jerk, we start pulling stuff out.
Right.
Don't get me wrong. I'm just wondering, are we becoming aware, as things do change, that if we do need to, look at talking to the managers that we have and stuff on it, and I'm sure they're looking at it too. But it just, when you're dealing with public money, everything gets to be highlighted and stuff on it. And that's why I was just kind of curious.
Well, I'll just say this is a really important event, and so it's a big focus of us, and we've been obviously monitoring our portfolios, and we're in continuous conversations with our managers, and we have very competent managers who are, have a bird's eye view of these markets and are being extremely diligent regarding what all the risks are, not just regarding Russia and Ukraine, but in general, across the globe. So, I know there's a lot of diligence being applied.
Okay, thanks, Scott. Yeah, Jan. No, I just wanted to bring it up. I just because it is an underlying question, because I know some of the questions I've had from different people, they start bringing up a more global outlook than just what's going on right now. So that's what I'm saying.
Mr. Chairman, with that, with that part of the presentation,
We have
if I may.
Mr. Seibel, Jan, we have Mr. Seibel has a question.
Thank you, Mr. Chairman. And first off, I want to really thank all the staff at Rio. I'm sure putting all of this together in a matter of days was very, very challenging. But I think, I guess my question would be, it looks to me like our managers are doing everything they can to divest Russian investments. And it looks like they're doing a pretty good job. Do we have a percentage? So of where we were at before this whole thing started and where we're at today, do we have a percentage of how much they already have divested before we even met today?
Good question, Troy. We've gone from basically 16 million down to 10 million. So that 6 out of 16 is almost 40% reduction.
Yeah.
And that is, you can see the top line is the commingled funds, which are much more difficult to exit from. They are larger contracts, like when we approve a $100 million tranche of funding for one manager, and then they're investing in oftentimes in funds that are commingled as well. So with our staff is looking at those items, watching. The investment managers also want to be removing and reducing positions. So it has been, phenomenal speed to identify and reduce to the level that has to this point. And I hope that people are seeing that the answer is here, no more new investments in Russia, and an absolute plan for exiting the investments with Russian connection. I hope that's what people are seeing. I know we end up getting bogged down in the semantics of how you actually do this, and it's a long, orderly process, but it is being expedited, definitely being expedited. But that is the intent. And as a matter of fact, as Mr. Anderson's pointing out, the markets are closing, the indexes are closing. It's not very apparent how Russia would even try to issue new bonds, or how to have new stock issuances from those companies that are Russian companies. You see large oil companies like British Petroleum and ExxonMobil are exiting to great financial loss, billions of dollars of loss, with their partnerships on LNG terminals and natural gas pipelines. And Germany is going to make a move that's very detrimental to them on Nord Stream. And so this is happening very fast. And these funds it's not something you can just sell your stock today, but this is the efforts that have been made have already dropped it from 15.9 to $10 million in just a few days. Treasurer Beadle.
Yeah, thank you, Mr. Chairman. And yes, speaking to that, I mean, this is something that we've been kind of preparing for, looking at as a board or as staff for a while, in terms of how we can manage these orderly exits. Obviously, we know 2291 last session, poses some challenges when we look at some ways that we can do stuff. But I just wanted to comment on, these conversations about how we can position ourselves have been going on for a while. I remember having conversations with Mr. Hunter going back to 2019 about our exposure in some of these emerging markets, when he was presenting to the Appropriations Committee, and then through 2020 and 2021 as the China issues and some others became more prevalent, and as the whole, we are pretty underweight for this. And in terms of whether or not we're making a knee-jerk reaction to do some of this, I just wanted to say that to point out that the conversation around this has been going on for a while. This isn't new, and in fact, just at our last meeting, we had the second reading and final passage setting up our governance and policy review committee to go forward on the board, which one of the things that they'll be able to do once we have our members fully set and everything there is look at our investment policies, work with staff. And this is a conversation that we had with our investment team before, and one of the reasons why we wanted to help get it restructured and get our new investment members that we got approved during special session is so we could pay more attention to these emerging market areas, pay more attention to the different areas of our portfolio that do have some of this risk. And I look forward to us having those conversations to get some of those formal processes in place going forward, so that we are well equipped into the future in avoiding as much of the riskier, concerning investments, and making sure that we're focused truly on just getting the best return overall for our fund. And in addition to our managers, getting out of this, I think that we will need to make sure that we're continuing to better utilize our proxies and our votes on all of these other areas too, to keep up that pressure beyond just the drop, the snapshot in time that we're in right now. And so, I think that we will continue to do that. But I decided to toss out that this conversation has been going on for a while. This isn't just a knee-jerk reaction.
And that shows that we're 1/4 of the position of those other states that Mr. Anderson had pointed out on the 0.05% compared to 0.2% on the average pension plan and is 0.2% of the overall market.
Absolutely. Our staff's been doing a great job on that.
And to point out that we did have a press release that our land board is more at the normal percentage. And so, I mean, it's something where we as a state are cognizant, and land board's going to work towards this as well. And so,
yes,
the SIB has been cognizant of this for a number of years, and we've got a little bit more work to do. We've got to get into executive session. We have a discussion on Russian entity investment strategy and options. And again, that's the agenda line for this special meeting. If we have any more comments on that, Brian?
Thank you, Mr. Chairman. The only comment, I guess it's just more of a comment thing, is that, again, the work that the Rio has done on this has been really good. But the other day, I heard this article that they were doing on the news where the Department of Treasury is seizing a lot of assets from the Russian multi-billionaires, like yachts and all those sorts of things. And so I was wondering if there's ever any indication where maybe some of the seized dollars or assets from these Russian multi-millionaires would go into some sort of fund, and then these investment managers could get the money that they've lost or they've ceased to invest in Russia, get those dollars back. So it was just kind of a thought that I had, and I don't know if that could be the case or not. Thank you.
Hopefully there'd be a fund to help compensate victims in Ukraine first. Commissioner Gottfried?
Yeah, thank you, Mr. Chairman. I think there's one point that you made that's really, really good at the end there, is just to make it clear for the folks who maybe don't follow the SIB all the time, is that we're talking about, these discussions today are about the State Investment Board dollars. And so the land dollars are a completely separate board. There's a separate oversight to that. So we can control here at the State Investment Board, but the other discussion on the land dollars, it's a completely separate board, another discussion. Just again wanted to emphasize that there is two separate processes for those, and we can control.
Yeah.
Oh, Mr. Chairman.
Treasurer Beadle?
Yeah, Mr. Chairman, I just wanted to make a quick comment to that, just because I am the only individual on this board that also serves on the land board. And that is something that we are actively working on. As you all know, we do have a much smaller investment team over at the land department than we do at the state investment or retirement investment office. But our team there is working with our 5 managers that do have exposure into Russia, just like our team at Rio is working with their managers that have Russian exposure. They're working and monitoring that same strategic exit from all of those invested funds as well, so that we can do it in an orderly way without causing overdue hardship to the fund in terms of losing a lot of our revenue from these commingled accounts and pulling out too fast. So I just wanted to comment that board, even though we don't have a meeting scheduled, we are actively monitoring the situation and paying attention to how to deal with the situation accordingly.
Yep, it's all hands on deck. I hope that citizens are seeing that today. We're moving towards this goal. Any other comments for Mr. Seibel?
Thank you, Mr. Chairman, and I would echo Treasurer Beadle's comments. I think one challenge we are going to have as a board is to communicate that everybody is on board with divesting from Russian investments. It's just sometimes it's not as easy as clicking the sell button. And so I'm trying to think of a way, and maybe the professionals in the room can help me with this, but this isn't just as easy as saying, clicking sell. And I think maybe we just have to make sure that the public is aware that this is going to take time, and it's gonna take a lot of effort from staff, but that the public needs to know that Rio staff and our managers are doing everything they can to unwind these positions as quickly as possible.
Thank you, Troy. All right, anything else before we move into executive session?
Mr. Chairman, would you like me to go over the basis for the executive session and the?
Yes, please, and then we'll look for a motion. I'm assuming Vice Chair-elect will do that as usual.
Now probably, yes. No, with regards to the basis for the executive session, again, we do need to go into executive session to discuss options with regards to an investment negotiating strategy. Mr. Chair, as you commented, these investments are made via agreements with managers involving large tranches of money, and it also involves which of course what we're talking about is the buying and selling of these securities. And just in general, and again for the public, it would be extremely fiscally damaging to the funds under management if the board were to engage in a discussion about investment negotiating strategy in the public before you actually implement that strategy, because then it no longer becomes strategy, right? It puts the funds at a disadvantage in any negotiations to announce what that strategy is before you do it. And so that is the reason why the executive session is needed. Now, we do empathize with the sentiments that have been expressed, which is money isn't important, people are important, and that thought, and why not just leave the money? But and while the public may hold those sentiments, this board are legal fiduciaries for these funds, and so you have a higher obligation to administer and review these decisions than members of the general public do, and so you do have to be concerned with the best course of action for the funds under management. And so for all of those reasons, we did discuss the propriety of having this conversation in executive sessions with our assigned Assistant Attorney General, who agreed. And so therefore, it's on the agenda for that discussion, and that is the basis for it.
All right. Commissioner Smith?
Yeah, just one question. Is there any portion, because I know this is a little bit different than how the land board tends to manage its investment strategies. Is there any portion of the discussion that we're about to go into executive session about that can be held in open session? So those who have joined us via phone can engage and hear portions of that.
Commissioner Smith, all of the items that were appropriate for the public session for the purposes of this presentation have been given to the board and discussed already. And so we did review each and every slide of the presentation and separate it out between the public and non-public portions.
All right, any more questions before we go in? A motion?
This is Rob Leck. I will make the motion to move into executive session pursuant to North Dakota Century Code 44-04-18.4, subsection 1, 44-04-19.1, subsection 9, and 44-04-19.2 to discuss confidential commercial information, investment negotiating strategy, and to provide negotiating instructions as it relates to Russian entity investment strategy and options.
I'll second it.
Second by Mel. We'll be exiting open session at 9:44, and we leave this meeting and open up another one, correct, Jan?
We do. We need a roll call vote on the motion.
Okay, roll call vote first.
Mr. Mickelson?
Yes.
Commissioner Smith?
Yes.
Ms. Smith?
Yes.
Mr. Clipwell?
Yes.
Treasurer Vito?
Yes.
Dr. Leck?
Yes.
Commissioner Gottfried?
Yes.
Olson,
Yes.
Mr. Seibel,
Yes.
Mr. Miller,
Yes.
Lieutenant Governor.
Yes. Motion carries. We'll open up, we're estimating this will take how long, Jan?
Approximately an hour and 15 minutes.
We'll anticipate around an hour and 15 minutes, and so opening it back into open session, an estimate of 11 a.m.
Yeah, or you see my, right here, step, right here, number 8. I've been trying to follow it. It's one for all, that's for sure.
Are we ready?
Yes.
Recording?
Yes.
Come out of executive session at 12 a.m. Reporting back into open session after conferring with Rio staff on further engagement with investment managers regarding divesting from Russian investments. Jan, if you want to summarize, and then we'll have a motion.
Thank you very much, Mr. Chairman. Just to reiterate, and as this was the basis for going into executive session to begin with, but just to reiterate that we appreciate the board's guidance and have received negotiating strategy that we will then need to communicate with our investment managers, and this will need to be done prior to a public discussion of the nuances of that negotiating strategy so as to not hinder, hamper, or impair our investment managers from negotiating on our behalf and implementing that strategy, and just really, again, appreciate the board's guidance in this matter.
All right, thank you, Jan. Dr. Leck.
Thank you, Lieutenant Governor. I would make the motion to approve the divestment of Russian investment exposure as discussed in executive session and direct staff to report at the next regularly scheduled State Investment Board meeting.
Second.
Second by Treasurer Beadle. Discussion. Thank you all for your time and effort and putting this together as expediently as possible as you have, and also beginning on the divestment as you have, reducing from 15.9 to 10 million to date. Is there any further discussion on the motion? Have a roll call vote, please.
Treasurer Beadle,
Yes.
Mr. Mickelson,
Yes.
Commissioner Godfrey,
Yes.
Mr. Clipsel,
Yes.
Commissioner Smith,
Yes.
Ms. Smith, Ms. Smith, Dr. Leck,
Yes.
Mr. Miller,
Yes.
Mr. Seibel,
Yes.
Mr. Olson,
Yes.
Lieutenant Governor.
Yes. Motion carries. Thank you very much.
Thank you very much, board.
With that, no further items on the agenda for today's meeting. Thank you for your efforts. Meeting is adjourned.
Thank you.
Thank you.
Thanks.
Thanks, everyone.